Welcome you all in today's seminar. Before we start the meeting, request everyone to please raise for the institute motto followed by national anthem. तब शुभ नामे जागे तब शुभ आशीष मांगे भारत माता की प्लीज बी सीटेड welcome again friends, first of all I want to give you one information, and I am delighted to say that on 30th August 25, we organized a study group seminar on AI. The response from all of you was truly overwhelming and highly encouraging. Thank you, members, for this. And I also request all the members who have not enrolled in a study group meeting, please enroll, where we are going to start more and more practical session. Thanks. As you know, our study circle has always strived to bring before you topics that are not only relevant but also extremely practical in our day-to-day professional life. Today, we have lined up with very enriching technical session. In the first session, we are privileged to have with us Advocate Gopal, a renowned authority on taxation law who will guide us on current and important issue under capital N. A subject that affect almost every client and require deep understanding of judicial development as well as practical implication. क्योंकि दोस्तों कानून की गहराई में उतरना आसान नहीं, हर पेचीदा मोड़ को समझना भी आसान नहीं, पर जब गाइड करे गोपाल सर जैसे विद्वान तो मुश्किल से मुश्किल विषय भी हो जाए आसान. In this world, I request our past convener MP Reddy ji to give a formal introduction of our speaker.
Thank you, Kailaji. Good morning to all of you. Today's first session we are having issues relating to capital gains, where Advocate K. Gopal will take up the matter as a faculty will take up the issues. And we did not mention about Advocate K. Gopal. He has been, visiting our study circle many times. Whenever we invite him, he never said no to us. And that is the greatness of him. And this is just a formality to introduce to him. He has been enrolled with Bar Council of Maharashtra and Goa on 7th October 1994. He joined the chamber of Dr. K. Shivaram Advocate and got the good experience and exposure in direct tax and corporate litigations. In the year 2004, he has started his own independent practice. He has been active in profession as well as academic activity by writing articles in various professional magazines. Also, he has filed several public interest litigations in the interest of tax professionals and associates in general. Few of them are PI challenging VDIS 1997 for the dependence of ITIT against levy of service tax on chartered accountants, etc. He has been on the managing council of the Chamber of Tax Consultants since 2000, and he was also president of the chamber in the year 2009 and 10. He is the editor of the Chamber's journal published by Chamber of Tax Consultants till 4th July 2019. He has been on the managing council of Western Zone of All India Federation of Tax Practitioners. He has been the editor of AIFTP journal in 2022. He is presently the president of Income Tax Appellate Tribunal Bar Association Mumbai. With this, as a token of respect to us, I request CA Hemant Gandhi and Jayesh Thakkar to present a memento to Advocate K. Gopal. I now request Advocate K. Gopal to take up the
Good morning, friends. Good morning. Let us start this day by paying our respects to Guru. Guru Brahma, Guru Vishnu, Guru Sakshat Parabrahma. Tasmai Sri Guruve Namaha. Other than physically, we have got so many gurus in profession who have taught us so many things. I consider our profession to be the best and the foremost guru. Because this profession of ours whether it is chartered accountants or advocates, this discipline which we get, which goes far beyond our professional life. It affects and it disciplines our personal lives also, our families also. With this, I thank Kailashi and my other friends in the study circle who every year very affectionately call me. Friends, I was just telling Kailashi, nowadays I am not giving any lectures anywhere. The reason is not that because so many young talent is available. We have done our due, but JB Nagar remains to be one of the very close to my heart because of so many friends. And I was looking into my invitation letter in that for last 19 years, it is been given award of the best study circle. So I would like to associate definitely with such circles because for 19 years I have been coming here. At least once I am coming. So I want that I should also be part of the success story. I am so happy for that. That is not because of me, because of the conveners who over the period they have been contributing. Kamal is there, Mr. MP Reddy is there. And one more thing, which is very thing is I could see so many familiar faces over here. So we can, nowadays because of online thing, many meetings also now take place, client meetings take place online. So no personal interaction takes place. But nevertheless, that's the technology is evolving. So we should take advantage of that. Now with this, I will start with my presentation. In this presentation, what I have proposed to do is, I would like to uh, segregate my entire presentation in 3-4 lines. First is the taxation of securities, shares, and several issues pertaining to that. Thereafter, I will deal with certain issues with respect to section 54 and 54F, and then any other issues. And as we are going to have an interactive session, in the end also, if any questions are there with respect to the subject matter, I am prepared to consider and participate in the discussion. And in between also, you can raise your hand and we can have a discussion. It is no such, because certain times what happens is on the flow, some question comes. If we can have a discussion, I don't mind it. Now, friends, I will start with my presentation. The period of holding of an asset, short term or long term. The definitions have undergone certain changes with respect to the period. Earlier, it was 36 months for any asset or to be a long term. Anything less than 36 months was a short term. Now, thereafter, they made an amendment, brought an amendment 1988 itself. They brought it for shares and securities. They said, no, it is going to be only 12 months. But subsequently, the statute was amended and made 36 months, 24 months for all other assets other than shares and securities. Actually, shares and securities, they found it is such a dynamic thing which is going to do it. As a tax professional, proportionately, they should have reduced the period of holding for the shares and securities also instead of 12 months. But anyway, nevertheless, because that will become more cumbersome. Because while computing in 9 months, if you do it, then I think they have retained the 12 months. Now, after why I am just reminding ourselves what is in my course of the discussion, I will point out this definition remains the same thing, but then they keep changing the character of the asset. For that purpose, if we can go to my next slide, where I have given the definitions, how they have undergone change. And now let us come to taxation of buyback of shares. Now this has gone change. Earlier, buyback of shares from 1999, they brought an amendment saying any buyback which takes place under section 77 capital A of the Companies Act, then the amount received will not be treated as a dividend. The reason was clause D at that point of time. This said any amount paid on the reduction of capital to the shareholders will be treated as dividend. So if the reduction of share capital, and so the department would take a view saying that, now because your share capital, if your buyback of shares is nothing but reduction of share capital, so we will treat it as a dividend. So they have put a clause in the exclusionary clause that this is not going to be treated as dividend. They in 222 proviso 4, while excluding that, they said that, that amount received will not be treated as dividend. Then what will happen to that amount received? That was subject to, in the hands of the shareholder, tax under section 46 capital A. What did the 46 capital A said? It was introduced for a mechanism for computing the capital gain in the hands of the shareholder. As per section 46A, the difference between the cost of acquisition, the value of consideration received by the shareholder on buyback of shares shall be treated as capital gain subject to the provisions of section 48, introduced by Finance Act 1999 with effect on 1/4/2000. So what used to happen, suppose you are holding the shares for a particular period, then according to that, it will become long-term, short-term, and it will be treated as capital gains in the hands of the shareholder on buyback of shares. Now, this continued till recently, and thereafter, in this one question comes, which I will take up. Suppose the shares are held as stock in trade, then what will happen? In the hands of a trader, this is held as a stock in trade. So it is now not a receipt taxable under as a dividend in the hands of that, because that is not to be treated as dividend. But the difference, as you are computing capital gains, the very simplistic answer is that is to be treated as business income, and as per the cost of acquisition, that is a simplistic answer. I think that's a right also. Now, thereafter, after 1/4/2014, from 1/4/2014, they changed the rules. They said the amount received, not with respect to all the shares, only which were not listed shares, and there any share buyback takes place, then they said they have changed the rules. Said that shares held not being listed in the recognized stock exchange, that will be where company will pay 20% flat under 115 QA, and 1034A granted exemption to that. Because now it is going to be taxed in the hands of the company. It will be whatever the shareholder receives, that is going to be a money received, tax paid money. So dividend is not to be, the amount received is not going to be taxed. Now 115 QA provided a 20% tax for the till recent one for this 10 years. The same provision, sorry, 2019 again there was some change was there, where the not being listed in the recognized stock exchange was omitted. So all the shares were committed included from 2019 till now. Now in 24 they again changed it. So now in this between in between, what happened in many cases, in the hands of the shareholder, it was all right, clarity was there. Many times the department invoked provisions of section 56(2)(7) C in some cases, Now, in the off late after the section 56(2)(10) came to which covers everything. There they said that if the market value is less than, if the money paid is less than the market value, so to that extent addition can be made. This issue came up before the traveled up to tribunal. In tribunal, many arguments were taken. One of the arguments was similar to what was for the purpose of bonus shares. In bonus shares also, department took a view saying that, no, this is an amount which has to be taxed. 56(2)(7) C will cover, and they used to difference from the market value and what is the consideration paid to be taxed in the hands of the company. In one case, Bora Financial, this issue was taken up. One of the arguments was, where is the property? Ultimately, something this is you have done, you have brought 56(2)(7) for the purpose of avoiding any kind of tax evasion. Here, the shares are cancelled and the company is not going to get anything, property is not there. So they accepted the argument and they have done it. Little dicey under the company's law, because shares cancelled unless and until they reduce the share capital. Till then, they have got a right to reissue. Under the 2013 Act also that is there. To say that there is no property generated, correct with respect to those shares. Now, anyway, that legal argument was accepted in the case of Bora Financial, and they said it is not taxable. Now, in this slide, I have given the details how the legislature had moved, because after 2014, what they introduced section 222 clause F, where they said that any share buyback takes place as per section 68 of the Companies Act 2013. The said amount shall be treated as dividend in the hands of a shareholder. Now here, after 1st October 2024, it became taxable in the hands of the shareholder as dividend because of 222F. Now that continued. Now in recently, then again they have changed it. They have said, it will not be when they amended it, made it a dividend. Sorry, now they made it a dividend. Now dividend is taxable in the hands of the shareholder. So what happens to the cost of acquisition? For that, in 46 capital A, they have amended, said that whatever the cost of acquisition, that will be carried forward as a capital loss. So suppose you have got a capital gains in the same year. So this income which you have received will be separately taxed as income from other sources, dividend income, and the loss which you have incurred, if there are any capital gains, will get adjusted. Not adjusted, then it can be carried forward. Now question comes, what earlier I was asking about, it is then capital, the shares are held as stock in trade. So then dividend is your again business income or your income from other sources. The dispute will persist, because in many cases banks and all, Coconut Bank and all, they have said that though there is a specific, but you have to see the nature of the asset. Nature of the asset is a capital, so stock in trade. So then income arising out of that will fall within that and then will be taxed as such. So similar issue, this issue will come up in the case of the where income may go as a department will try to treat as income from other sources and say that no, this can be only treated as a capital loss. You have not held it as a capital asset. Then how can you qualify it as a capital loss? Then are you going to allow them as a business loss and adjust it? According, I think logical conclusion will be, should be that whatever is the cost of acquisition should in the stock, because now the shares have extinguished. So it should become a loss and it should be either carried forward or it should be adjusted against the business profits in that year. I think that is a logical conclusion.
Sir, in the AIS, it is looking at income from, we have to income from other sources, as a dividend. We
Hmm.
have seen AIS recently, and we have filed the return of the SSC.
That's what exactly why. Now, as far as the this dispute will come, dividend will become your income from other sources. What will happen to the loss?
Loss, they are saying it will be set off against the profit, capital gains.
No, capital gains if you are holding as an investment. Suppose you are holding as a trader, you are a trader in shares, and you are holding the shares and you have gone for the
Then it will not be, cannot be set off. Yes.
then that is your business loss. So what happens? Income falls under another head, whereas the loss is generated in another head. Whereas the same thing is happening with respect to when you treat dividend as in the hands of the individual as investment, and then, but that is all right, because that is also actually you are trying to collect taxes as income from other sources. And now, but giving him the loss only in the capital field, which suppose he doesn't have, then he has to carry forward.
Yes.
So same thing will continue in the stock also. I think then business, if you are holding as a stock in trade, you'll have a benefit because you can at least set off against the profits of the current year. Yes, I think.
So from that, whether it is interest or dividend, I'm talking about the stock interest. So whether it is taken as a dividend or it will be an income, business income, first. So should it be a business income or be taxed?
See, if you could see the section 222 clause F definition, any payment received by a shareholder from the company on purchase of its own shares as per the provisions of section 68 of the Companies Act 2013, then the said payment shall be treated as dividend income in the hands of a shareholder. Now they are, so it is a dividend income.
Correct, but when the shares are held as stock in trade, I don't think so. It would be a valid thing to treat the.
As income from other sources, correct. That's the reason why I was referring to Coconada Bank. Coconada Bank says that in 56 ITR long back Supreme Court said this, no, if your bank is holding shares as a stock in trade, so as a natural corollary, you should treat it as business income. That's the reason I said that.
So now,
But what question is ki department may dispute this.
I understand. But then in that case, the TDS which is deducted also would be taken from the business. How will you claim the TDS? Because nowadays they are deducting TDS from dividend.
No.
So as of now, we have to match our return as per the AIS.
Hmm.
Because if we will not match, then we know, everybody knows what is it. We cannot go against the AIS.
Aye.
As of,
No, it's not. Whether it is against the act, that's what is my question. Is it against the act? Whether the act says that dividend has to be treated as income from other sources only, do you have the Income Tax Act? So, see, that's my question. Ki this here it will create dispute. What he is saying is correct. Now, it as a natural corollary, it should fall under dividend. Then what happens to the, because it is stock in trade, now stock has extinguished. So now that asset, that item has extinguished. So whatever is the cost embedded, naturally it will get, you in the same year get as a loss. If you are having business losses, it will carry it forward.
I make of 10, whatever we get the benefit, and it is, if it is dividend, it is definitely going to fall under income from
Other sources. And act says one thing more, says that the cost of acquisition which is there will be treated, 46 capital A says that should be treated as a loss only. That's the reason I'm raising this query. Then if it is held as a stock in trade, what will the treatment then? The treatment, because they are not provided, doesn't mean that it's not going to be. Ultimately, my business, thousands of stocks are there. Thousands of scripts are there. So one script is I have executed this transaction, it will become my business income. Dividend will be the business income. Then if dividend becomes my business income, then naturally the loss has to be. But then 46 capitally recognizes it as a loss, but they are only identifying the item, saying that with respect to the nature of the asset, what is going to happen. So they say it is a loss to be treated as cost of. So if it is a business, then it is a business loss. According to me, that should be the
Let us not talk about distribution. How many times you are talking there, you get a dividend. You are creating the profit and loss account. So I'm getting that dividend is just about this.
So if I'm not about generally when you're keeping stock in place, what will deal with them? Those are changes you have to dealing in an enterprise, so business stock. You are raising from that stock, normally should get business income. So question that time you treat, because already in other sides. That is business income or income on others.
what is the treatment you are giving?
It is the income on others. Because the changes in that case will just to match, otherwise.
No.
How it
See,
is.
this problem of matching of TDS, what he was mentioning, is that started now. I have seen in many cases, especially in the freight forwarders cases, I have got so many cases they are coming, where what they said, they invoke the rule 35. And say that, it is not matching, so we will not grant you because the TDS, the payee deducts on gross. Whereas what is your income is only the net income. So here, I will say that we should use earlier in the case for the purpose of bad debts. In the case of stockbrokers, what used to happen? There certain shares were purchased and they were nobody has taken delivery. Ultimately, the broker used to suffer losses. So they said, your income you have not offered the entire share, the value has not been credited to your profit and loss accounts. How can you make claim with respect to that? We will allow you only the brokerage part, which has you are not able to collect as your bad debt. Bombay High Court took a view, said no. First, here special bench took a view, saying that this is what is going to be your complete thing is a loss, and the bad debt will include the entire amount, gross amount, and they allowed because the department took a view. So specifically, there was a provision for the money lending business where not only the interest which was offered to tax in the earlier years can be written off as bad, but the loans can also be written off because you are into business of money lending. That specific provision was there. Now, in the absence of that, can we do it? So then, in the case of stockbrokers, they took the same view. I think similarly, this issue will come up. Now assessments are going to come up after this amendment. So this issue will be a very ripe issue. So this controversy about the buyback of shares, where they wanted to, rationalize. So they are rationalizing when you're looking at only one particular thing. Because whenever the institute or chamber, All India Federation, we make a representation, they don't consider that. They think that as if we are giving from the opposite camp, so they should not be considered. We had ironed out this very specific issue. We said you treat capital gains, the share buyback independently of the treatment to be given in the hands of the SSE. You said that this is a transaction which is going to result into gains or losses, and it is to be treated as such. So this would not have come. This problem would not have been there. But anyway, they have chosen to, pinpoint one particular asset as a dividend as a particular stream of income falling under one particular head, and again asset as well as only as a capital asset, not as a stock in trade. I think that approach is not correct. I think I will move forward. So this issue will keep on cropping up now and then, and I'll move on to next issue with respect to debentures. I had argued many cases where in the case of a debentures issued by the companies in favor of the lenders, because of the BIFR. BIFR settlement takes place and then they said you settle it in particular manner, they don't have. So you issue debentures to the banks and they used to say that make it condition. These debentures will be subscribed by the stakeholders of the company which is settling in before BIFR in a particular manner, and the promoter directors have to individually take over certain shares as certain debentures and then do it. So in that case, certain department was the view, say it is not a capital asset in the hands of those people who have acquired the debentures, because the debenture is nothing but debt, it is a debt. So whenever it is redeemed in the end of the period and money received is only principal amount come interest received, the any gains are there, that is only an interest, it is not a capital gains. Because on the basis of treating it capital gains, many SSCs have taken benefit of section 54 or 54, sorry, 54F, not 50 or 54F. So they said, no, you can't get 54F benefit because it is not income under the. So if you see under Income Tax Act, there are several provisions which treat debenture as an asset. I am starting with the Securities Contract Regulation Act 1956, which lists out debenture along with shares, scrips, stocks, bonds, debenture stock, or other marketable securities of a like nature as an asset, as a property. Similarly, first proviso to clause 3 of section 47 recognizes debentures as a capital asset. The provisos of section 48 also recognize the debenture as a capital asset. Intention of the legislature is further amplified when they introduce section 50 capital AA by Finance Act 2023. By this, what they have done, they said, notwithstanding anything contained in section 242 capital A or section 48 of the Act, where the capital asset, a unit of a specified mutual fund acquired on or after 1st April 2023 or a market linked debenture is an unlisted bond or an unlisted debenture which is transferred or redeemed or matures on or after 23rd July 2024, the full value of consideration received or accruing as a result of the transfer or redemption on or maturity of such debenture or unit as reduced by the cost of acquisition of the debenture or unit or any expenditure incurred for that will be treated arising from the transfer of a short-term capital asset. Now I have highlighted certain parts of this and for specific reason. Now, so this, as far as the intention of the legislature shows, it is remain to be a debenture. A debenture is an asset. So prior to introduction of section 50 capital AA, this should have been treated as a debenture. So department in many matters, they have accepted the position as asset. There are case laws which say that where convertible debentures are issued, then they are assets. But in the case of non-convertible, NCDs are there, then that is remains to be a debt. It cannot be treated as an asset. I think that is a debatable issue. That's not a correct position. And it is to be treated as asset. Suppose by section 50 capital AA, you accepted it as an asset. And now you are treating it as a short term, any income arising out of the that asset is only a short term capital asset. So what they want to say, it is not a even if you are holding the asset for more than 24 months or more than 12 months, it will not be treated as long term. Whenever you will transfer, whenever you are redeem, the gains arising out of that will be treated only as a income arising out of a short term capital asset. So 50 AA makes it clear that any income arising out of that will remain as your short-term capital gains only, and it will tax as such. It will not be treated even if the period of holding is there. Now, why they have done this? Why they have done this? Now let's go back to section 50. Section 50, any depreciable asset is transferred. Then the gains arising out of that depreciable asset to be treated as short-term capital gains. So their gains were to be treated as short-term capital gains. So many SSCs, what they did, they transferred the assets, and thereafter whatever gains were arising out of that, they have taken benefit under section 54 EC, or if they are individual or HUF, they have taken benefit of section 54F. Department said no, that can't be done. They don't want that position, because that ACE builders case, in ACE builders case, they said the nature of the asset remains to be the same. Nature of asset doesn't change, it remains to be the long term. Only gains arising out of that became short term. So what you have, by bringing section 50, you're taxing, it's a charging section, so you're only taxing the income arising out of that as income, as short-term capital gains. You are not changing the nature of the asset. So out of that, the gains are invested in section 54 EC, then you are eligible for that. That's Bombay High Court decision. Subsequently, it was confirmed by the Supreme Court also in another case. So now they wanted to meet that. So here they said the asset is to be treated as short-term capital asset. And so this question will only come in the case of an investor. He has invested in a debenture instrument. So then only it will short-term or long-term will come. Suppose he is a trader in the debt company. So this question won't come. This question won't come. So that is to be treated as business income only, as my learned friend was saying, that it will remain so because that is in the course of the business. So only in the case of investors it will come. Now question comes, as an advocate, I was thinking whether still can I take the benefit of section ACE builders in this case? Because here they are saying the gains to be treated as short-term capital, because assets nature, they say that is going to be short-term capital asset. So they wanted to specifically neutralize that. So they have said that any gains arising out of that, the nature of the asset will become short-term capital asset. So as such, prima facie it looks like that we can't change it. But they are not taxing the asset. They are taxing the gains arising out of that. So you are, for a deeming provision, you have changed the nature of the asset. If I have been holding as an investment for the purpose of taxation, only for the purpose of 50 capital AA, because you have said for the purpose of section 242 capital A and or section 48. So both are with respect to computation of capital gains. It will be very adventurous, but we can very well say that the gains arising out of that, you have not said that notwithstanding anything contained in other provisions of the capital gains like section 54, 54 ECR, everything. So can we take a benefit? There is a gray area is available. Somebody can, in a worthwhile case, can try it out. But as such, they have tried to meet out the ACE builder specific finding. The gains are short-term, but asset is not short-term. So by drafting this legislation, they wanted to catch up with that. So they made the asset to be short-term capital asset. Yes.
Practical difficulty or inherent difficulty, because when you are hiring the leader, so you are getting to block our asset. Automatically it goes for short-term capital gain. Where we said, by filing the return, you are not difficulty getting getting already the city. The problem was about
correct. So what will happen is, suppose you are holding these assets
From the-
and holding these assets and you are not transferred in this asset. How are you going to classify them? No, the year transferring, it will go to the, because of section 50 capital AA, it is a short-term capital gains, agreed. But suppose you are not transferred. So 31st March, whenever you are filing your returns, how are you going to classify these assets? Yes.
Like, for many companies, like, whatever, more problems are there in the schedule. The plan is making whatever it is, and then that particular asset is extremely very same. The automatically is very easy from the proper asset. If you are negotiating, and the person what the negotiating, they go to shorter that way. So if I want to see like a negotiation, but value of return I am not able to do it.
That is, actually, now what happens is, if you are doing it, not able to do it. Suppose earlier that benefit was that used to be get 143 1A, they used to adjust and say that, in the intimation they used to do it. Now they have enabled the system in such a manner, or they have disabled the system in such a manner that you can't make a claim which is legally otherwise you could have done. What 87A has happened. 87A is the classic case of that, because in the act that was not there, and they provided in the utility in such a manner that you can't make a claim because they don't want you to make a claim. So that is, now we are entering into that era. So
Is it possible after filing the return to back it out communication or any other way? You like the computation and, but I mean, online this process is become a bit difficult because it is not get any.
because what they are doing is, over a period of time, even 154 also, they thought we are moving 154 rectification application in physical, and so they are making online. And I have seen recently, I have filed a writ petition on one matter where all the 154, 5, 6 in 154 are filed, same day dispute resolved, mistake pointed out, rectified, no change takes place in computation of income. So they say rectified. So earlier they say no need to rectification. No, they don't say that. Now mistake rectified, no change takes place in the computation of income, and they issue that. So according to me, when you move a 154, you have to move a 154 saying that there is a mistake committed, and I want to make a claim. Now, only tell me one thing, because I don't file my returns myself, so my auditors does. So is it possible this claim we can make it in the revised return?
Rectified return option there. We have to file, if you have reached 154, you can file rectified return.
No. What I am saying is, suppose I file my returns today, and within 2 months I want to revise my returns before it is 143 processed. So what will happen is in the revised returns there are maybe certain provisions which may not be allowing this kind of claim. Then I am revising my original return, I want to make this claim. Can we do that? I don't know, because I have not done that, so I am not very sure. I asked my No, what happens is, in the utility, certain additional benefits may be there in the, no, it's the same thing.
Because they were writing a letter, probably you can.
So 154 you have to make. I have committed a mistake, and in that, first online, in the same 154 can be forwarded to the assessing officer. If they reject, then dispute is a ultimate object. You are asking me something.
Or needed, decorated mutual fund.
Something. In that they are covered in the same, see, if you see 50 capital A, specified mutual fund, and then they have your, what they say is, see, not a unit of a specified mutual fund acquired on or after 1st April 2023 are a market linked debenture. So one view was taken with respect to the asset part, which I earlier mentioned, only it is an asset if it is market linked. According to me, that is not the correct position. If it is as an instrument, it is being transferred because ultimately you are making it as a security only because of the definition given under if you can just go to the section 2H of the Securities Contract Act, which says that securities which includes shares, scrips, stocks. So securities become asset in the definition under the Income Tax Act. So that includes debenture, then it should also be a asset. Now, with respect to this computation, one clarity is that with